You buy this massive general liability policy, you strap on a hard hat, and you think your contracting business is completely protected.
Right, you assume you're perfectly safe.
Exactly. But, Sean, since you're tuning in from Colorado today, I bet you already know firsthand that relying heavily on subcontractors leaves this huge, invisible door wide open in that wall of protection.
Oh, absolutely. It's a massive vulnerability.
Yeah. So today, we're diving into a deep exploration into the source material. We've got this highly specialized reference guide on contractual risk transfer for subcontractor-heavy trades.
Provided by Client's Choice Insurance, right?
You got it. And our mission here is really to unpack why simply buying insurance it absolutely doesn't protect a general contractor or a roofer from the mistakes of the people they hire.
Yeah, because the mechanism we are looking at here, it isn't just about going out and buying another policy.
Right.
It's entirely about moving the financial responsibility for a loss back to the party that actually created the risk in the first place.
Which makes total sense. You didn't make the mistake, so you shouldn't pay for it.
Exactly. So our exploration today is going to decode how the 4 pillars of risk transfer, these specific coverage timelines, and state-specific legal trapdoors all interlock to either save your business or just leave you completely exposed.
Okay, let's unpack this. Let's unpack this interlocking system, because if a sub messes up on one of your jobs, you obviously don't want your own insurance taking the hit and, driving up your premiums.
No, definitely not.
So looking at the first of the 4 pillars here, step 1 is you get added directly onto the subcontractor's general liability policy as an additional insured.
Right, the AI status. And being an additional insured, that's just the baseline. It gets you on their policy, sure, but it leaves a massive loophole.
Uh-oh. What kind of loophole?
Well, if their insurance company pays out a claim for that mistake, what's stopping them from turning right around and suing you, the GC, to recover the money they just paid out?
Oh, wow. I didn't even think about that.
Yeah, they do it all the time.
Yeah.
This is exactly why you immediately need the second pillar, which is a waiver of subrogation.
Okay, got it.
It legally blocks the sub's insurer from coming after you to recoup those losses.
But even with that block in place, the guide says insurers can still try to, split the bill, right?
Mm-hmm.
Which brings us to the third pillar, primary and non-contributory wording.
Yes. Without this wording, the sub's insurance might look at the GC's insurance and say, hey, you need to chip in and share the cost proportionally.
Paying pro rata.
Exactly. It's a standard cost-saving tactic for insurers. But primary and non-contributory wording just shuts that completely down. It forces their policy to pay first and pay fully.
Reading through this, I kind of pictured it like a highly secure bank vault.
Oh, I like that. How so?
Well, if you have the additional insured status, it's basically like having the combination to the vault.
Right.
But if you forget the primary and non-contributory wording, it's like leaving the vault door propped wide open anyway. The insurers are just going to stand there and argue over who pays what.
That is a perfect way to visualize it. Missing any one of these tools just entirely defeats the purpose of the other 3.
So we need all 3.
Yes, but if we connect this to the bigger picture, none of these mechanisms happen in a vacuum. A subcontractor has absolutely zero obligation to name you as an AI or waive subrogation unless it is explicitly demanded in a written subcontractor agreement.
Which is the 4th pillar.
Exactly. That written contract is the engine. It legally forces the sub to do the first 3 things.
Okay, so the written contract forces them to take the financial hit. But the source text points out that when that hit actually happens, matters immensely.
It really does. Having the 4 pillars in place doesn't help at all if they expire the moment the sub's trucks leave the job site.
Right. And the guide draws a hard line here between ongoing operations and completed operations. They even list specific ISO forms.
Yeah, they dive into the weeds a bit there. They contrast form CG 2010.
That's the ongoing operations one, right?
Yes, CG 2010 covers active work. Claims that happen while the sub is actively, swinging hammers on the site. Okay. And they contrast that with CG 2037, which is for completed operations. That one extends the coverage for issues that pop up after the project is entirely finished.
Wait, so if a GC only requires ongoing coverage, are they completely on the hook for that delayed roof leak? Like, say, a leak that isn't discovered until it rains 3 months later?
Yes, they are completely on the hook.
Wow.
And this is especially critical for your area, Sean. The source material specifically highlights Colorado's CDARA.
The Construction Defect Action Reform Act?
Exactly. In Colorado, defect claims notoriously surface well after a project wraps up.
Hmm.
So if you only require ongoing operations coverage, you have this massive gap the second they finish the job.
So best practice dictates you absolutely have to require both forms.
Without a doubt.
Which brings up the whole administrative side of this,
Mhm.
because demanding both coverages in your flawless written contract doesn't physically put the protections in place.
No, someone actually has to file the paperwork.
Right. And here's where it gets really interesting. The guide contrasts scheduled AI endorsements with blanket AI endorsements.
Yeah, this is where the rubber meets the road. A scheduled endorsement names the specific GC and often the specific project directly on the policy document itself.
Which sounds great in theory, right? Very precise.
It is incredibly precise.
Yeah.
But it requires manual updating every single time that subcontractor takes on a new project or signs with a new GC.
And this is the common failure point the source warns about. Everyone assumes the AI status is in place, people get busy, a loss happens, they check the paperwork.
And nobody ever actually updated this specific schedule.
Exactly. The GC isn't covered at all.
And what's fascinating here is how the insurance industry attempts to solve for this human error. Agents vastly prefer blanket endorsements.
Like Forms CG 2033 for ongoing and CG 2034 for completed, right?
Exactly. The blanket approach automatically grants that additional insured status as long as there is a qualifying written contract requiring it.
Oh, so it just completely removes that administrative step where things fall through the cracks.
Yes, which the text identifies as the absolute most common reason risk transfer fails in practice.
That is huge. Okay, so you have the pillars, you have the timeline covered, and you have the blanket endorsements to prevent human error. You'd think you're safe.
You would think so, yeah.
But there's a final boss here. State law. Because a perfect insurance setup can still just be totally kneecapped by local legislation.
Ah, yes. The Colorado contract note.
Right. The guide focuses on this specific local reality check. It brings up the Anti-Indemnity statute for construction contracts in Colorado.
That's a crucial detail.
Basically pointing out that a GC can't just forcefully require a subcontractor to pay for the GC's own negligence.
Exactly. And the underlying public policy there is really about maintaining skin in the game.
Like keeping a safe work environment.
Precisely.
Yeah.
State legislatures pass these laws because if a general contractor could legally pass off 100% of the liability for their own mistakes onto their subs.
They'd have zero financial incentive to care if a scaffold was falling apart.
Right. So the state steps in and just voids those clauses.
Yeah.
And the critical disclaimer in the text is that an insurance certificate or an endorsement requirement alone cannot fix an unenforceable indemnification clause.
Oh, wow. So if your contract language is illegal, the insurance won't save you.
It absolutely will not.
Yeah.
This is why the realms of insurance advising and legal counsel have to operate together. You must have legal counsel draft or review that indemnification language.
So what does this all mean for Sean and anyone else listening? I mean, it means that for subcontractor-heavy trades, survival isn't just about buying insurance.
Not at all.
It's this interlocking system of contracts. The 4 pillars, time-tested endorsements for ongoing and completed operations, foolproof admin strategies like blankets, and, very healthy respect for local state laws.
Well said. Knowledge in this arena isn't just power, it's literal financial protection.
Absolutely.
While this exploration was educational, reviewing these specific documents with your legal and insurance advisors really is the mandatory ultimate next step.
Definitely do that. But before we wrap up, it leaves me with one final kind of terrifying thought to mull over.
Oh, what's that?
We've talked entirely about the contract between the general contractor and the subcontractor.
Right.
But what happens when that subcontractor hires their own subcontractors? If missing just one single piece of paperwork breaks the 4 pillars, how deep does that paper trail have to go before the whole chain of risk transfer shatters completely?